Hello guys, and welcome to this video. And just from you clicking on this video, I guess that you are looking for the next big stock for 2023, and I am here to help you with some advice which possibly could help you earn some high gains from these few stocks that I have chosen, which I have invested in myself. And I'm going to show you what ones I feel will give you the most gains this year, just because of what has happened this year. So before getting into the video, make sure to hit the subscribe button, leave a like, and yeah, let's get straight into this video. So at the moment, the market has not been good. The past 2 years, the stock market has not been good at all. And there's been lots of opportunities, because a lot of the time people say when people run, you advance. And that's one of Warren Buffett's, who's one of the most richest stock investors at the moment going on. So I have been taking up the opportunity where people have been escaping through the stock market, and I have just been buying, even though it is very, very scary, because it's like catching a falling knife with the red candle just constantly going down. When is it going to stop going down? But this is where you don't worry, don't try and time the market. That's one of the worst things to do, trying to time the market. You just keep buying and buying and buying. And this is called dollar cost averaging. And this will help you gain more money in the future if you are long-term investing. If you're swing trading, these stocks could be all right for you, but these are mainly for beginners who want to do some long-term investing. That's what I have invested in them for myself. With the first stock, let's just get straight into this. The first stock that I feel will be the highest potential gainer for 2023 is the one and only Microsoft. And the reason why I'm feeling that Microsoft will be the best stock going out of the top 5 is because every single computer is basically based off Microsoft, and I feel like no one can ever leave without Microsoft. Microsoft have so many innovations that are possibly going to be helping the world, and are helping the world now. So a day ago, they announced that they're going to be investing a few billion into ChatGPT. And this is one of the main AI systems that is unbelievable, basically. It's had so many people jumping on. There was some sort of stats that came out saying it took 5 hours just for ChatGPT to gain 5 million visitors at once. So I'm going to go through the fundamentals of why I feel like Microsoft is going to be the best play, because I don't want to go too much into it, because this is for beginners who are going to be investing. So if we just have a little look, at what the price is, okay? That's one thing I look out for. So current price is $241 a share. And this stock has not really died that much compared to many other different stocks. A lot of stocks have been dying 60%, 50%. Microsoft has been holding its price, really, but that's because it's so dominant in the market. It's such a big stock. So we can see here the average volume, the market cap is $1,791 billion. This is $1.8 trillion basically. So the market cap is $1.8 trillion, which is absolutely huge. So they aren't going anywhere. Microsoft is not going anywhere, because anyway, guys, if you're worried about investing and losing your money, I'm telling you now, you won't lose your money with Microsoft, because so many people need Microsoft. Look at our computers. I can't deal without a Microsoft. I can't deal with Apple. I can't deal with Mac. So yeah, I deal with Microsoft. So they're not going anywhere. This is a long-term project, and as they are obviously investing in ChatGPT, I feel like they're going to be innovating more with AI systems, and AI systems are the future as well. So I feel like I am in safe hands with investing in Microsoft. I don't feel like they're going anywhere. And yeah, they also have a dividend yield. So a dividend yield is basically where you can earn money just from holding the stock itself. So every single share that you have, you earn 1% basically back. So say if you bought a share for $240, you would gain $2.40 back. So that's how dividends work, and then you can reinvest into different stocks or the same stock. So I like to have dividend yields. So this is some sort of passive income. A video will be popping out soon about passive income if you guys are interested, but we'll just get into the top 5 stocks that I feel first. We'll go straight into the returns as well. So the returns don't really matter, because obviously the markets have been going mental with the recession and different stuff. So 1 year, Microsoft's been down 20.35%, S&P roughly 14% down. But with individual stocks, sometimes it's more riskier, because we're dealing with an individual stock, and any news can make it go down or up. So that's why some people don't want to have the S&P. They don't want to, just stick with their 7% gains every year. They want to have maybe 20% gains, but they could have minus 20% losses rather than minus 14%. So the financial health, because this is the one thing that's important to find out. The revenue. So this is the quarterly revenue of the latest Microsoft earnings. So $50.12 billion. So this was the last quarter, Q3, year-over-year change plus 10.6%. That's a very, very big number. So that's their revenue, $50 billion. Gross profit, $34.67 billion. So that's a very, very big profit line. Year-over-year change plus 9.5%. Really, really good to see. That is some very solid figures right there. Their revenue growth rate as well, we can see right here that it's looking very, very good. It's on the up. Bearing in mind it's had a few really, really bad years with the current market, the current economy. They've still been profiting, which is really, really good to see. Earnings per share has been dropping quite a lot, which isn't too much of a problem because earnings per share, not too worried about this in this current sentiment. Don't forget it's a long-term play, so it should slowly go up. Liabilities though. So liabilities is one thing that we've got to check. So long-term debt. So this is Q3 2022, $70.61 billion, year-over-year change of minus 2.9%, and short-term debt of $6.53 billion, year-over-year change plus 5.6%. So their short-term debt has been increasing, but their long-term debt has been decreasing, which is really, really good to see because we want long-term debt to be going down. But I'm not too worried about their debt because they're technically earning that every single year. So it's really, really good to see. And the last one is their cash flow, which is $16.92 billion, year-over-year change of minus 10% almost. So their cash flow has been going down, but I'm not worried too much. So yeah, that is my first stock that I am basically investing in myself, and I do feel safe to long-term invest because I have been a beginner before, but this is kind of my long-term, not worried, just sticking in a pot and leaving it there, not too worried about it, and just have a look back in a year or two time. So my second stock that I have been heavily invested in, this is my biggest position. This is Meta, and Meta has been going through a lot basically. The past 2 years they've been going through a lot of court cases, a lot of data leaks. There's so many different things that have been going on with Facebook, and I feel like they've been hit so hard that this is the reason why their stock has gone this low. So they're currently sitting at $141 a share. I did buy myself at $94 a share when it was very, very low. However, the reason why I bought this was because of how good the possible returns could be. So their highest price that they ever got to was around about $380. Bearing in mind the price right now is $142 a share. So that's almost 2.5 gains if I just buy this and just hold and see if it does hit all-time high. It might take a very, very long time to hit all-time high, but I'm not worried too much because I am trusting Meta with what they can do. Because you got to think, guys, Meta are a huge company, but social media kind of wise, they are huge. They own Instagram, WhatsApp, Facebook, and so many different major monopolies. And the reason why I'm trusting this is because no one can deal with going out without Facebook. You got to think of all the Facebook mums. They love Facebook. They're not going to be able to leave Facebook. Instagram, come on, Instagram is huge, a multi-billion-dollar business right there. Social media use, you got to think how many adverts come through on there as well. And WhatsApp. WhatsApp's one of the biggest text messaging services out there. I think a lot of people, especially in the developing countries, use WhatsApp because it's Wi-Fi. You don't have to pay for text messages and phone calls. So yeah, that's one of the biggest reasons why I've invested in Meta. Their market cap is $365 billion. Dividend yield, they haven't got dividends, so you won't be earning passive income from that, but we'll get straight into the returns. So as we see here, the yearly return minus 56% almost. This is why I feel like now is a very, very good chance to buy because it's just so cheap. And there could be higher gains because don't forget, a lot of people have sold. So here could be a possibility to earn more while everyone has run away, basically. Financial health. One of the most important things we need to find out, like I've said multiple times, revenue. $27.71 billion Q3. Year-over-year change of minus 4.5%. So they have been going down in volume, which isn't a worry too much, because only 5%. Gross profit, $22 billion, minus 5.3%. This might be because of adverts, because people don't want to be buying things. So yeah, the recession hasn't really helped because when people want to spend money, when they're out of recession, they'll be using these adverts and buying things with these adverts. So maybe this might have had a hit with the figures, but we don't know the exact reason why. The market cap obviously has gone down minus 61% because the shares have just plummeted. The net income 4.4 billion, which is down 52%. As you see from this chart here, the revenue has been declining, which isn't really good to see, but we understand why. The revenue growth rate has been going up, which is really good to see. Earnings per share going up as well. So this is their assets. So the most important thing is their assets, and are they going to be able to perform in the future? So quarterly, their net cash $14.54 billion with a year-over-year change of only minus 1%, which actually isn't that bad. As we saw, Microsoft had a bigger losses of net cash. Their accounts receivable minus 7.1% year-over-year change, $11.23 billion. Liabilities, long-term debt, very bad. So their long-term debt has increased in a year plus 108.1%. Their Q3 2022 long-term debt $25.16 billion, which is a lot of money, and their short-term debt of $1.32 billion, year-over-year change plus 17%. So they have been increasing their debt. I don't know why this is. This possibly could be to pay off all their court cases and their fines. So yeah, it's not looking too good short term for Facebook, but long term I do trust this major monopoly, and I do trust Zuckerberg, which is very weird that I would say that. So next stock that I feel like is going to be a major play for the future is Airbnb. And the reason why I feel like Airbnb is going to be huge is because it's one of a kind. We haven't seen a stock that is similar to Airbnb, and I don't think any other company can beat Airbnb, because what they do is they allow anyone to just rent their house out for a day, and to allow people to stay in there to generate a revenue for themselves. Their current price is $102 per share, which is not too bad really. Their highest they ever hit was around about $216 a share, so around about 50% down from what they used to be. So it's not really too bad, but this is a good time to buy in, I feel. Their market cap is $64 billion, so it actually isn't too expensive. You got to think it's literally 5 times cheaper than Facebook themselves, or Meta as you want to call them. So I feel like this is a very long-term stock to go for, because I don't feel like it's going anywhere. A lot of people love Airbnb. I even use Airbnb, you know, if I want to go away for a day or something, I scroll on Airbnb, find a place, and I just rent it out for a day. And a lot of people use this as their own job, so I can't see it going anywhere. They haven't got a dividend yield, I'm afraid, but maybe later on they might have it in the future. Their returns against the S&P, they're down minus 35.9% from the year, but that's not worried because the housing market has crashed. A lot of people haven't had money to spend on going away, so I'm not too worried about this. But once people start generating more money, you know, once everyone starts coming out the recession, people will treat themselves and go on holiday, use Airbnb, and basically treat themselves. And obviously Airbnb do take a cut, so it will be profiting the company as well every single, you know, purchase, which is really good. So their revenue, I feel like for the next 2 years, 3 years, 5 years, they're going to keep going up and up and up. And I even reckon for the next 10 years their revenue be going up every single year, just because obviously COVID has come out of the pandemic. We're not in the pandemic anymore, and without any major world economic things, I feel like this we're going to keep going up and up and up. So revenue year-over-year change at plus 28.9%, revenue at $2.88 billion in Q3 2022, gross profit of $2.19 billion, year-over-year change at plus 29.2%. So very similar to the revenue. They haven't really got many outgoings, which is really good to see, because they're just taking cuts from everyone renting their own houses. So they actually haven't got a product that they are selling, which is really good. So not many liabilities. The market cap, as we know, is minus 35% because of obviously what's happened. Revenue is going up and up and up, and like I said, I still feel like this will keep going up and up and up, which is really good. Their net cash is $7.53 billion, year-over-year change of plus 25.2%, which is very much similar to their revenue, up 29%. Their accounts receivable $178.11 million, year-on-year change plus 19.7%. Liabilities, they have got a bit of debt, which is a shame. Q3 2022, their long-term $2.31 billion, year-over-year change at minus 2.4%. So they are paying it off, which is really good to see. And their short-term debt, their short-term debt, $52.32 million, which is very low. And the year-over-year change is minus 20.2%. They are basically paying back their debt. Compared to all these other companies, they haven't got much debt because they haven't got really much to pay for, which is really good. Cash flow. Free cash flow, $977 million, just shy of $1 billion. Year-over-year change at almost double, plus 84.4%. They have all this free cash flow, which they can then pay back their debt, and their operating free cash flow, 982 million, which is basically just low of 1 billion, plus 83.6%. So I feel like this is a very, very good long-term stock, because I feel like they aren't going anywhere. No one's going to compete with them because they're just such a huge monopoly, and that no one is going to trust anywhere else because this is the giant. So this is a long-term play, which I am very, very safe to invest in myself. So yeah, choose if you like. So my fourth best stock that I feel is going to be for 2023 is a very weird one. You probably wouldn't have thought this. You probably haven't invested in it. Nike. Nike is the one that I have invested in. And the reason why is because I don't feel like Nike is going anywhere. Currently sitting at $127.84 a share. Their highest ever hit was around about $170. So it's not actually that much of a dip. There was a dip to around about $90, but they have been recovering very, very nicely. So their market cap is $196 billion, which is actually not that bad. I don't think $196 billion for Nike themselves. Nike are huge. You've got to think how many sponsorships they have. All the big football players, technically in the sports industry is huge, and they're majorly dominated by Nike. Adidas, I would say, is a bit lower than Nike, but I don't feel like Nike is going anywhere. Even I wear Nike all the time. I wear Nike joggers right now, so I don't feel like Nike is going anywhere. All the footballers are sponsored by Nike. You got to think the shirts, they have so much money, and I just feel like they're so big that you can't get rid of them, basically. So their returns, they have been going down, minus 11%. Actually, this is very, very interesting. So Nike has dropped less than the S&P 500 the past year, which is very, very interesting, because everyone knows that they're a very, very safe company to go for, because everyone knows who they are. Everyone knows who they are. Nike, whatever you like to call them. Huge in America, huge in the UK, huge in Europe, huge everywhere. So they're a major, major giant. Revenue at $13.31 billion, year-over-year change at plus 17%, which is huge for this time of year as well. Gross profit, $5.53 billion for Q4 2022, year-over-year change, plus 5%. Their net cash has taken a dive though. Their net cash is $6.5 billion, however, year-over-year change at minus 40% almost. This might have been a hit because of the World Cup. I don't know what the reason was, but a lot of spending has been done, hence why their net cash has been taking a hit. Inventory, 9,326 plus 43.3%. Liabilities, long-term debt, they have been paying that off. $11.59 billion, year-over-year change at minus 5%. So they have been eating in on their debt, which is good to see. Their debt isn't too expensive, I feel. Almost 12 billion, not too bad for Nike, bearing in mind how much they earn a year. Short-term debt, just shy of $1 billion, but they have added to that by 98%. So I'm not too worried about it. I feel like it is a very, very safe play. It's not a penny stock. You're not going to lose all your money in one night. I do feel like Nike is going to be staying as the massive giant. No one's going to be able to overtake them. Maybe Adidas might creep up, but with all their partnerships, signing Ronaldo and just all them ties, they've got so many fingers in many pies, and I just feel like they're not going anywhere. So that's why I feel like they're my fourth best stock for 2023 and could possibly go above its all-time high, gaining easily plus 50%. So that's a very, very good investment for 2023, I feel, in my opinion, and that's why I have invested in them myself. So the safest stock that I feel that you could probably invest in is the massive tech giant Apple. And the reason why I feel like Apple is going to be just the best stock to have, I feel like it's better than Tesla. It's just got huge market domination. I don't feel like any other tech relates to Apple. Apple has just made a huge domination in the world. I've even got an Apple phone. That's just how it just says it there. They do laptops, computers, watches. It's just everything. They do everything, and I just feel like there's domination. So there's been rumours that Apple could be releasing cars in the future, and that's just another market that they could easily excel in. They have so much money to spend just on this stuff. You got to think virtual reality. They can spend in that. They can collab with Meta. You got to think how big this company is, and it's endless. They can make so many different things we don't know. We don't know what the future holds, but Apple are one of the biggest stocks out there. And this is why I feel like Apple aren't going anywhere. They're currently sitting at $140 a share right now. Their highest they ever hit was around about $180. So they are cheaper than the all-time high, but they are slowly advancing. This is why I still feel like now is a good time to buy it before, you know, the markets get green again. They have a market cap of $2 trillion. Basically $2.2 trillion almost, which is absolutely huge. They're one of the biggest stocks out there in the market, but I just feel like this is one of the most safest stocks to invest in if you are a beginner. They do have a dividend yield as well of just shy of 1%, so there is some sort of passive income they'll be earning as well. So if you put $1,000 in, you'll be earning $10 back. So it's not bad, but passive income is nice. The Apple returns versus the S&P, they did take a little hit of minus 16.19%, S&P minus 14%, so it's not looking bad, but their 5-year, they have been having insane growth, plus 210%, and I feel like they're going to keep advancing with all these new gadgets that they're releasing. You got to think how many people love Apple. You got to think how many people actually buy the latest Apple model when it does get released, because there's so many Apple fans out there that literally just spend $700 on just a brand new phone that actually hasn't changed too much, but they've just got such a huge target audience that everyone loves. And bearing in mind, I am an Apple user. I could never use a Samsung phone. I'm so in love with an Apple that I just can't change. A lot of people feel the same as I do. So this is why I feel like they are never going to go anywhere. And I just feel like this is really safe to go for. So their revenue, this is huge, guys. This is very big revenue right here. Q3 2022, $90.15 billion. Year-over-year change at plus 8.1%, which is huge for how much that is. That's literally $8 billion extra revenue a year. Gross profit $38.10 billion. Year-over-year change plus 8.3%. Huge. However, I was saying that this is a really safe play. The only thing I do worry about is China and Taiwan, because Taiwan make a lot of these Apple phones. And I don't know if this will impact production of Apple and possibly affect the long-term stock price. So it all depends what happens in the future if Apple end up having, you know, trade deals with maybe India rather than Taiwan, because obviously this whole China stuff could affect the future of more phones being made. This could then, if they do sign a deal with India, this then could affect their profits. So it's still a bit of a risky one, but however, I feel for long-term play, Apple is very safe to go. As we see here, their revenue is going down a little bit, but we're not too worried about, because obviously recession, people don't want to be spending too much money. Maybe later on people will start spending money. Earnings per share growth rate hasn't peaked as much as 2021. Their net cash, which is huge, is $21.48 billion in Q3 2022. However, year-over-year change minus 20%. So that is a big cut, but they still have huge amounts of money. Inventory 4,946. Accounts receivable $28.18 billion. That's a year-over-year change of plus 7.3%. So their liabilities, this is the one bad thing about Apple. They have a huge amount of debt. Their long-term debt, $109.71 billion of debt. This is a year-over-year change of minus 8.1%. So they have been eating into their debt. They have been paying it off, which is around about almost $10 billion they did pay in this year. Short-term debt has been increased to $22.77 billion, year-over-year change of plus 32.9%. So there is a lot of debt, but is this the reason why? Are they just covering their backs because of Taiwan? But I do feel that they have a lot of money. They have a lot of assets which they could then sell as well. It's just the problem with the Taiwan, their factories, what's going to happen. Their free cash flow of $20.84 billion, year-over-year change of plus 22.7%. And operating free cash flow, $24.13 billion, year-over-year change of plus 19.4%. So I feel like Apple is a good long-term project. I don't feel like this is going to be going anywhere, and I'm not going to stop using Apple, but I will stick to Microsoft computers. So these are my 5 stocks that I feel are the safest to invest in for beginners in 2023, because I don't feel like after one night you'll lose all your money. I feel like this is a long-term play and you could generate some good money. Bearing in mind the markets right now, this is very good dollar cost averaging prices for these stocks. So yeah guys, I hope you enjoyed this video. Let me know if you do hold or buy any of these stocks. And if you do buy any, let me know how many you hold, because I'm very, very interested. And yeah, I hope you enjoyed this video. I'll be posting more videos about dividends and passive income in the future. So guys, I hope you enjoyed the video. Hit the subscribe button, make sure to watch my videos, and yeah, peace out people. See ya. Bye.